Good morning, traders and investors. My name is Shen Mongangi, one of the best market analysts here at HFM. So, beginning today, we had the NZD interest rate decision happening today, and it came out on a hold. So, there's no major volatility influx in the NZD. And yesterday, something interesting happened also on the gold market. Let's have a look. So yesterday, traders and investors were wondering, why did we have that sharp spike on gold where we moved upwards from 3338.91 all the way to 3292.50. That's the point where we're trading on right now. The reason was, remember about the tariffs issue? We had tariffs coming out, the deadline for the tariffs that was supposed to be today on July 9th, but Donald Trump announced that he has pushed the tariff news all the way to August 1st. Uh, so number one, the tariffs deadline has been pushed to August 1st, and also we have a decline in geopolitical tensions, and that's why we saw that fall from the 33.8.91 all the way to where we are right now. So today on gold this week, gold is still under pressure ahead of the FOMC minutes that we are expecting today. We have FOMC minutes coming out today at 9 p.m. and this will give investors and traders a clear clue on the stance of the Fed. So the clue will be, are they going to either hike the interest rate or have a hawkish stance, or are they going to cut the interest rates, that is to have a dovish stance. So that's where investors and traders will be looking at so as to find a decisive break below support or above resistance. Coming again to our forex pairs, we'll start with AUD/USD. So this week, the Australian dollar was the star performance after the RBA unexpectedly held rates. Remember, we were expecting a cut on interest rates on the Australian dollar, but a hold on that signified that the Australian dollar is still strong and there's no likelihood of a cut. And therefore, uh, we had that rise on AUD/USD. If you move on to our lower time frame, you can see that sharp spike that we had, a little bit move back, then we had that spike during that time, and right now we are trading below that support at the 0.06543 level. Also today, the forex market is buzzing with central bank news. Remember, we are expecting the FOMC minutes, and also something else that happened was the New Zealand, as I said, had a dovish stance. The FOMC minutes will dictate the next move of the US dollar, and a hawkish surprise could see the US dollar break out of the range that we are in right now, and weighing on pairs like Euro USD and JVP USD. Because as you understand, when dollar gains strength, the euro will be losing strength, and JVP also will be losing strength if we move on to our daily time frame. Now moving on to our US indices, that's US 500, US 100, and US 30. We saw US 500 and US 100 and US 500 hit our all-time highs, but at the moment it's giving back the profits that it gave to the market, and we are moving slightly down. So the question is, are we having a pullback, and are we going to touch the 61.35 support zone? That's the point where we had a break with a high momentum candle. So for today and this week, the market is in a wait and see mode. Why? Because the FOMC minutes are the primary catalysts, and if the Fed signals that it's in no rush to cut rates, it could trigger profit taking and pull indices back from their record highs. Opposite, a more dovish tone could reignite the rally to continue upwards. So dovish, upward move for the US indices, hawkish stance, downward move, and give back its profits to the market and test back our support zone at the 61.35. And the same will apply for our US 100. Coming on to oil, many traders and investors are really interested with oil. Yesterday, we saw a little change on oil, with traders balancing the positive risk sentiments from the tariff delay against underlying demand concerns. So yesterday, we saw that form of indecision candles where buyers and sellers were in a mixed sentiments, despite even the tariff delay. And today and this week, the AIA inventory report will be out, and it will be the main driver for today. A larger than, remember, AIA will show us remember, trading is about demand and supply, and AIA will show us the concerns in demand and concerns in supply. And therefore, a larger than expected draw in crude oil stocks will be bullish for oil, and will a surprise in and a surprise will be bearish for oil. Oil prices remain sensitive to the strength of the US dollar, and any new developments in global trade negotiation will change our stance on oil. And last one, for our German stocks, German 40, which has been performing well of late, and it's as if you're going back to our all-time highs at the, let me mark it, as if you're going back out to our all-time highs at the 24462.78 level. So yesterday, German 40 continued its impressive rally, gaining another 0.55% to close at 24,267 level. And today we have opened above that level at the 24,271.25. That's where we're trading at the moment. The index remains supported by optimism that a broader trade war can be averted, and by expectation of continued support from the European Central Bank. Remember, the trade delay has been pushed from July 9th all the way to August 1st, and therefore it's bringing some form of optimism on the German stocks. So today and this week, while the trend is still bullish, the DAX is technically overbought, suggesting the rally could be due for a pause. Maybe you can get a pullback on that rally. The index performance for the rest of the week will be tied to global risk sentiment, which will be heavily influenced by the FOMC minutes today, and any further US-China trade deal will initiate any form of volatility in the market and find its initial support at the 24,000 level. So we have discussed what is happening on the dollar, on the gold, on the indices, on our forex pairs, that's Euro USD, GBP USD, Audi USD, and lastly, we have checked on the German stocks and the US oil. As you're going to maneuver on the markets, make sure that you use use a good risk management, and make sure that you also go with the right mindset. Remember, the 3 pillars of trading is have the right trading plan, have the right trading strategy, and also have the right trader's mindset. So with that said, I'd like to end our live stream there. And thank you all for joining in, and see you tomorrow, same time, same place. You can watch our trade goals, drive balls promo video, and make sure also that you're trading gold as we have discussed on our technical and fundamental analysis. That's it. Goodbye. Love you all, and see you tomorrow.
This is your moment. Win a 2025 Mercedes C-Class. Explore the markets with a top-tier trading setup. 10 chances to grab the latest iPhone. Trade and earn points for the lucky draws. This is Africa's time to shine. Join the action now and trade your way to glory.